Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, a bubble in tech. First, a warning from OpenAI's Sam Altman. Now, options traders bracing for a potential downturn. We'll tell you exactly how and debate the markets with the investment committee. Joining me for the hour today, Josh Brown, Joe Terranova, Liz Thomas, and Jim Lebenthal. We'll take you to the markets, and you will see that we are red across the board, and it is the NASDAQ that is the drag today. Meta, Amazon, Microsoft, the laggards there. Bloomberg story caught our attention today. The headline reading, quote, options traders brace for a big tech sell-off with disaster puts. This is a trade according to Jeff Jacobson. He's the head of derivative strategy at 22V Research Group, whom we reached out to. And the trade looks like this. These are puts bought on the Invesco QQQ Trust Series 1 ETF. That's the ETF that tracks the NASDAQ 100. The cost of hedging against a sharp downturn and a smaller one is at an almost 3-year high. The spread of that is at an almost 3-year high. Apollo's Torsten Slok on Monday, tech is vulnerable. AI will have a significant impact in our lives and productivity, but that doesn't mean that the tech companies in the S&P are correctly priced. I mentioned what Sam Altman said earlier this week. Joe, what's your thought on this trade that is being put on right now? This disaster.
I'm not sure I like the term disaster. I'm not sure that the recent earnings reflect that that's the word you should be using right now. But last week, we did talk about going out and purchasing some volatility, going out and protecting, reshaping the risk ahead of what could be a period over the next 3 or 4 weeks where you don't have the clarity and markets have this corrective behavior. Now, for today, you have 8 of 11 sectors which are actually positive. Obviously, the 2 sectors which are down, communication services, technology, and energy's down. It's always down. Forget energy for a second. But it doesn't really feel like you're getting that broadening out that's being reflected in 8 of 11 sectors being higher, because the overwhelming positioning, the overwhelming bullish sentiment really is in the AI trade. It's in the technology trade. It's in the mega cap names.
I get that.
And that's what's unwinding right now.
Is it?
Well,
okay.
No, wait a second.
You say that's what's unwinding right now.
Well, for today it is. For today it's unwinding.
You think it's just a one-day thing? I
don't think anyone
Meta's
really.
On track to post its worst 2-day drop since April. Okay? So, remember what happened in April? That's when the market bottomed in April, and it was ugly in April, and it was uglier in April because the mega cap stocks rolled.
So generally, what you see is that when you have, and let's be clear, these are momentum names, and over the last 5 days, you have momentum down nearly 2%. Obviously, momentum, the best factor year to date, takes the market higher. If we're going to get a little bit of a crack in momentum, yeah, then I think you're going to have instability in the market. I don't think the market's going to stay here. And it could be a multi-day process of correcting a lot of these names. Look at Palantir. We'll talk about it a little bit further. Later. We'll talk about that later. But it's a great example of a stock that had that one-day crack, and then over the next several days, you had the follow-through selling. So I think you will see over the next several days a continuation of a little bit of this momentum correction.
Josh, is tech vulnerable, as Torsten Slok portrays in this note on Monday? Do these so-called disaster put trades make you sit back and say, okay, there's at least a cohort of traders that suggest that this tech mega cap trade could be a little vulnerable here? And I can give you a catalyst for why in a moment, but address the issue first.
Okay, yes, it's a bubble, but everybody has the consequence of that statement wrong. Let's start with the bubble part. Very obvious. Look at that last raft of high-profile IPOs. They're all getting smoked because the enthusiasm on the first day is message board and internet-driven, and the financial media gets really excited about the valuations, et cetera, et cetera. And then people stop paying attention because there's something else to point out, another shiny object. But lo and behold, you have Circle, which hit $263 a share in the last week of June. It's 135. It's down more than 100 points. Take a look at Figma. Not quite as bad, but pretty bad. Was $122 on the first day of this month. It's at 70. No sign of a bottom in sight. I can go on.
Bullish.
We can look at 5 or 6 of these.
right? How about the bullish one? That was a one-day phenomenon.
Could that be any more on the
that.
nose? Yeah, so Mike Bird from the Wall Street Journal said, if you were writing a novel or a screenplay about a stock market bubble, and you use this as a plot device that a company named Bullish would go public at the apex of it, the editor would pull it out and say, it's a little bit too much. So you've got that activity going on. It's not bad. I like that there are IPOs, and I'm not against these companies. I'm talking about the investor behavior around them. The rugs are now being pulled within hours as opposed to days or weeks. And maybe that's healthy. I'm not going to argue that these stocks belong where they opened up, but we can't pretend it's not happening. Now, my friend Todd Sohn at Strategas keeps these amazing charts where he looks at the leveraged 2x ETFs and the amount of fund flows going into them versus the inverse ETFs, which would be bearish bets. Off the charts bullish activity. We don't have anything to even compare it to in terms of the way that people are placing their bets. And there are a lot of other examples that I could cite, but we don't have that much time. So I want to just conclude by saying, yes, of course, this is ridiculous activity. Palantir might simultaneously be the most exciting company in the world and also the most overvalued stock I've ever seen in my life. It's not their fault. They're not telling people that the valuation is great. They're just running an amazing business. But they're going to do $4 billion in revenue, and it's a $400 billion market cap. Like, I get it. I'm excited about Palantir too, but the stock price action has gotten crazy.
Well,
so the air is coming out.
Can we do a 1 week on Palantir, guys? Not an intraday or a year to date? Because what Josh is talking about, I think if we have the ability to do a there it is, 1 week. Thank you. Down almost 13%. So there you go. It's the worst, by the way, streak for that stock since March.
But this is my conclusion to everything that I was just saying. If this activity continues and people get a little bit more selective in hyper growth tech and the air comes out, the funny part, the ironic part is it's going to go back into the mega caps. Not on day one. But people are going to say, well, I still want to invest in AI. I still want to buy growth. I just don't want to pay 100 times sales. So what should I do? I'm going to pull the lever for Alphabet, which has a reasonable valuation. I'm going to buy Amazon. I'm going to buy Apple. So the joke is that if you want to hedge the runaway train of enthusiasm for AI, that's fine. Maybe you should. Maybe you should take profits, whatever the case may be. But like a lot of that money is going to find its way right back into mega cap tech, which means the Qs may not be the ideal way to hedge like a September shock or a negative NVIDIA call. You might be better off doing some other sort of hedge. But I do agree with the premise of your question.
I feel like B of A and their trading desk today is channeling this whole conversation because and actually they've given us a reason to even discuss it further along with this options trade. They list 3 reasons why mega caps are poised to cede their leadership, okay? Number 1, mega caps lag more than lead in easing backdrops. Hello, Powell. Our U.S. regime indicator shifts to recovery where mega caps have lagged 2/3 of the time, and a shift into value and equity income is how they see the second half of this year shaping up. So the first one, if you're going to get a backdrop of easing, which I think we all kind of agree we're going to have a backdrop of easing. We're only arguing about is it September or later, but the Fed's next move is likely to be easing, and thus you get a shift into value that speaks exactly to the rotation that some are looking for here.
Right, Scott. So that rotation, which there are many barometers for, I do use the relative performance of the equal weight S&P 500 versus the headline S&P 500. It's fledgling, that rotation right now. I mean, it's less than 100 basis points of outperformance over the last week. And before that, forget it. It is absolutely critically dependent, the broadening, the rotation, whatever you want to call it, on the Fed easing, on Chairman Powell indicating that September is a likely date to start easing again. Absent that, I strongly suspect that you will see flows go rapidly back to mega cap tech. Everything that's been said about the Palantirs, the IPOs are very valid points. And just extending on something that Josh said, if you look at mega cap tech, sure, the Mag 7 is trading at roughly 29, 30 times forward multiple, and maybe you say that's expensive, but bear in mind, this is also where the growth in earnings has been coming from and is projected to come from. So you're looking at mid-teens earnings growth year over year projected for the next several quarters. That gives a PEG ratio of 2.0. Some of the Mag 7 are a little bit more expensive. Don't really want to talk about Tesla. Some of them are cheaper, like an NVIDIA, which is the biggest stock in the universe, and it has a 1.4 times PEG ratio, which frankly is cheap.
Okay. Speaking of NVIDIA and these other mega caps, Morgan Stanley out with a note today, excuse me, that says mega cap tech stocks are more underowned versus the S&P 500 exiting the second quarter of 2025 than at any point in the last 16 plus years. NVIDIA is now the most underowned large cap tech stock, followed by Microsoft, Apple, Amazon, and Broadcom, while Intuit remains the most overowned name. Joe, you have spoken most recently about Apple being underowned. It is, and you can explain this for our viewers, it's counterintuitive, and I have the monitor of Josh in front of me, the large monitor that people can't see, where he snickered a little bit as I read that. Because when you read that and you say NVIDIA is now the most underowned large cap tech, or that mega cap techs are more underowned versus the S&P exiting this quarter than at any time in the last 16 and a half years, you're like, what? How's that possible?
Because people panic and react the same way. And through the course of market history, they have proven to be remarkably consistent. If you think about the fall, we went through that period where it looked like we were having what? The easing backdrop. And the market rotated. It rotated into areas like industrials and financials, and it moved away from semiconductors, and it moved away from mega cap technology. And then you moved into the early part of 2025, and you had that April Liberation Day massive shakeout in the market. And yes, it presented a scenario where you had a lot of growth managers who moved away from these mega cap companies. And very quickly, because the revenue growth and the earnings were present, they had to rebuild positions. And I've said there is no better example of that than what we have witnessed in Apple over the last 3.5 weeks, the rebuilding of position. We talked at the end of July about when we rebalanced the quality momentum ETF. I said at that time we were seeing momentum building for the very first time in the Mag 7, momentum that we hadn't seen build since the latter part of 2023. So it kind of all fits together, and unfortunately, it really reflects the emotional element and the deficiencies that we all have when thinking about investing, and we react to price. That's what we do, and that's exactly what's happened over the last 6 to 9 months. That's one of the reasons why you're seeing Apple move as aggressively as it has over the last several weeks.
Speaking of rebalancing, Jimmy, Mahaney at Evercore ISI, he has rebalanced his top internet picks for after earnings Q2. He's keeping Google, yours, #1 long. Amazon's the #2 long, but he's replacing Uber with Expedia as #3. What do you think?
A side note, all of us have a wide cadre of fellow money managers that we speak to, and I will tell you many money managers are focusing on Expedia. Frankly, I don't quite get it because it always seems to me like that's a middleman that can be cut out by Delta's website, by Hilton's website, et cetera. But nonetheless,
if it could have, it would have.
Well, okay, fine. I mean, for however you want to phrase it, money managers are focused, in my observation, on Expedia.
What about Google?
I think it's a layup
on this show.
I think it's a layup, a slam dunk. I mean, I'm 5'9". I don't have that many basketball analogies, so Scott, maybe you'll help me out there. But I mean,
an airball. I haven't seen you play, but I just wanted to throw that one in.
Yeah, I'll spare you. Look, it's obvious. The multiple, the growth rate, I think that the company is doing a very good job of simply stating we are competitive, okay? We are not going to be left by the roadside. In fact, recent surveys of large language models have shown that, frankly, Alphabet that is at the top, and then there's the web services, and then there's YouTube and Waymo, very attractively priced. And look at the price action. Joe, I know you and I had some good repartee over the last few weeks about a tepid response to earnings. That, however, has been followed with a slow burn higher, and I love that. That's accumulation going on, and I think it's going to continue.
21 years ago today, Google went public. It's their IPO. IPO price of 85. It's only up 9,500%. Only 9,500% in the 20 years since. Speaking of Amazon, is Mahaney's number 2 long, price target to 300 from 290 at Loop. Josh, you want to weigh in here?
Yeah, I think this is the slam dunk. There is no AI without huge profitability at AWS. And yes, they're making tons of CapEx investments just like their competitors are. They sort of have to. But I think the story here is just very simple. If anyone's going to find a way to make money and monetize all of this activity and all of this CapEx that's already been invested, not just by Amazon, but by everyone else, this is going to be ground zero. And I think they know it. And I think they are operating with that in the backs of their heads. And it's so funny. Like, I remember a year and a half ago, people thought this was about, like, who owns the large language model? Like, is Claude going to be competitive with Perplexity? But it's not the point. The point is the cloud infrastructure and the data centers and the hold on the customers. And I think AWS is in a great position, just like Microsoft and just like Alphabet is. But the under-owned thing, we're talking about a $4 trillion market cap on its way to $5 trillion, and we're saying under-owned. You have to actually look at what they mean by that. They're saying, in terms of institutional ownership relative to the stock's weighting in the S&P, and they're saying, like, NVIDIA is the most under-owned, but when you actually look at the data, it's 92 basis points below where it was quarter over quarter in terms of institutional ownership. So it's not like this massive chasm where, like, oh no, nobody owns NVIDIA relative to its weighting in the S&P. It's not even close to being like that.
That's exactly why I posed the question at the outset with that exact thing. It's like you hear that and you're like, no, that's obviously not true on its face.
Bro, there are 20 standalone AI ETFs. What do you think the number one position in pretty much all of them is? Then there's another 10 AI infrastructure ETFs. So there are 30 standalone ETFs that are all directly investing into the AI theme, and they're all buying NVIDIA, and they're all taking inflows. The Vanguard Technology ETF, VGT, just broke $100 billion in assets. Joe will tell you, he knows the ETF business. This has never happened before. There's never been a sector ETF that's broken $100 billion in assets. None of these stocks are under-owned. We're doing like microscopic surgery on the fly of a mosquito, trying to find some, like, little edge here. It doesn't exist. They're all plenty owned. You could take my word for it.
No, I think it extends beyond the mega cap universe. Like, I'm thinking of cyber, for example, which has been one of the most popular areas within the technology universe. We're focusing on it again today because Palo Alto had their earnings. They had a better than expected guide. The market loves it. There's a stock up about 4 1/3%. Got upgraded today to buy from neutral. 215 is the price target at B of A. Joe, you own it.
It did exactly what we were talking yesterday that it needed to do. It needed to give you a quarter where you exceeded the expectations. Really, the guidance is the strong point here, and it's one of the reasons why it's moving significantly higher. I will say this about the report. It didn't do what I suspected it might do, which would be comfort the entire cybersecurity space, which is in the midst of a mild correction. Take whatever position you want on where we go from here with that correction. But I would have thought that a strong earnings report from Palo Alto, favorable price action, it would have lent itself to see some strong support in the other cybersecurity names, and you're not seeing that.
CrowdStrike is down. You know, Josh, that's your big name in this area. Why is CrowdStrike down 1.5%?
Look, I think it's a story about the overall software sector just cooling off. It's not the end of the world. The IGV, let's just look at the broad sector. is only, and I say only with quotes because this would represent in normal times a pretty good year, only up 9% year to date in total returns. So that's kind of like the backdrop. 67% of the companies in the IGV actually are negative on a year-to-date basis.
Not even that. But by the way, two-thirds of the IGV are down 20% or more from their highs.
Mm-hmm. That's right. So I think it's a sector story. It has nothing to do with the outlook for cybersecurity spending or cybersecurity-related CapEx or demand. None of that has anything to do with what we've seen with these stocks. I think just sometimes people take profits. If you look at, with the exception of Fortinet, if you look at the earnings calls for the big five in this group, let's say, and there probably shouldn't be a big five, there should probably be a big three. And I know we're getting some consolidation, but like none of them really gave you any kind of inkling that there was some sort of a spending pullback into year end or anything like that. So these stocks had an unbelievable 2023, an unbelievable 2024, a great first half. And now the space is cooled off. Money is shifted to semiconductors. We know that. And it's just the kind of thing that happens from time to time. But I think if you're a long-term investor in one of these names, and I am in CrowdStrike, I think your best bet is probably to ignore it unless there's some fundamental change.
Liz, what do you think about cyber? Is this like going from hot to not?
No, I think cyber is a long-term investment, and I think if you're in it, you keep it. If you're not in it, it's something that this is probably a decent entry point and you're getting an opportunity. But again, this is not something, in my opinion, that you trade. I think this is something that you own. Certainly the demand for cyber is not going down. And just software in general, my 2025 outlook actually chose software over semiconductors. It hasn't quite worked out that way, but I do think that there is opportunity for software to pick up as the year goes on, especially if we get into an easing cycle and money flows out of a lot of the hot names.
Yeah, I don't know. Citi today says we believe more upside, so keep buying the dips in terms of semis. Broadcom gets a price target bump today. Intel's in the news for the investment, $2 billion from SoftBank, along with obviously the government news of the week. Up next, our top calls of the day, including a price target hike for one of Joe's stocks. It's rallied at nearly 200% this year and later. Josh Brown is back. Update to his best stocks in the market list. You don't want to miss it. All right, let's do calls of the day. Let's throw up Robinhood today. Price target to 160 from 105. Reiterated outperform at Bernstein. So 160 from 105, Joe. They also today, Robinhood launches its pro and college football prediction market. So notice DraftKings and Flutter were down on that news. You own the stock.
Recent purchase into the ETF. So we're just trying to kind of understand how it's going to trade based on momentum. But I think what is impressive about the company, and one of the reasons why it was a candidate overall to be included, was the score increased dramatically on the quality side. This is a company that continues to diversify its business model, not just oriented towards crypto, into other areas of the financial services industry. And they're beginning to throw off cash, seeing the revenue growth being very strong, and that quality factor is really more than anything else. The momentum has always been there for this company. Now, as we move forward, I think you have to acknowledge, and I want to be humble about this, it is going to be susceptible to where the price of Bitcoin and Ethereum and other crypto assets go. So if you see a continuation of the mild pullback that we've seen over the last several days in those crypto assets, I think you're going to see Robinhood trading lower. That's just going to be the effect of crypto.
Is it a bull market barometer in some respects too? Because the things you cite, in a tie a little bit to a bull market.
Yeah,
right?
and I love that you're identifying that, because I don't think you can ignore it. No, I don't think you can ignore those things. I think those are reflective of behavior more than anything else.
Hey, let's look at DraftKings and Flutter. I did mention those, and I just want to touch on them. I saw that earlier this morning they were down. And some were suggesting it was because of the Robinhood news. Flutter's flat, and DraftKings not down all that much. So we'll move on from that. Rocket Companies initiated buy, $25 price target, BTIG. Josh, this is you.
Yeah, I will not sell any of my shares in Rocket right now because I think if and when they ever get around to normalizing interest rates, this is like obviously going to be one of the biggest beneficiaries while the housing market has been down and out, this company has been pulling off very aggressive acquisitions, including this Mr. Cooper deal, which will close by year end. And based on what the analyst is saying, that will make Rocket the largest mortgage originator and servicer. And they are going to have a war chest of cash post-close. They're going to have about $500 million worth of merger-related synergies over the next 2 years. And the rate cuts that will spur more housing activity. Don't forget, they also acquired Redfin earlier this summer, and that deal already closed. So from my perspective, this should be a $25 or $30 stock if they can execute. It won't happen overnight, but I'm actually looking for a market-wide pullback to get this thing back into the low to mid-teens, and I'll probably add a lot more if it ever does get down to that level. So I'm looking at this as like an 18 to 24-month situation that could trade substantially higher.
UBS raised their gold forecast today. That's one of the calls we want to hit. Target 3,600 by the end of March. That's up from 35, and to 37 by the end of June. 37 by the end of June from 35, despite the dialing back of some trade frictions, they say. We see U.S. macro-related risks, questions over Fed independence, worries about fiscal sustainability, and geopolitics, and underpinning the de-dollarization trends and more central bank buying. That's interesting. Liz, what do you think about that?
Look, I have liked gold for a long time, but back in spring, it started to kind of stall out after the big run-up that it had from political volatility and tariffs. Right now, because policy uncertainty has actually come down, given the fact that tariffs are either in effect or maybe just the verbiage around it has slowed down a bit, I don't see a ton of upside for gold maybe between now and year end. I think we would need an uptick in some more of that uncertainty to see another big bid. Gold has had an incredible run. It has outperformed the S&P over periods, which is just amazing. So I think we've squeezed a lot out of gold for now, and we would need a shift in the policy narrative to put it back on the uptrend.
All right. Well, all right, let's do this best stocks in the market list with Josh Brown. A new name, I said. It was added on August 12th. So a week ago. Yeah. Insimed, INSM. Why?
Yeah. Well, so I am not recommending that people buy this right this second, but it's a really great example of a huge winner that sneaks up on you. I only have 3 biotech names on my best stocks list right now. It's just been a horrible sector, but the sector is starting to turn the corner, and this is really one of the first to make a huge move. It's up about 95% over the last 3 months. The name that we did talk about, Judge, that has worked out for viewers of the show is Alnylam, ALNY. It's up 50% since the day we talked about it here on the air. And that stock still looks fantastic. But these are like vertical moves. The one that I want to focus on is the third, Gilead. We talked about the stock once already. This is a giant in HIV treatment and HIV prevention. They had an excellent earnings call, which for people that follow the pharmaceutical space will tell you that's pretty rare these days. But they are the world leader in HIV. They announced huge gross margin improvement. The pipeline looks great. They have a new drug on the market that they said scripts were being written within hours of approval. And as you can see, yeah, the stock is up slightly from where we talked about it, but it's still hovering just below the prior high. I think 120 when it breaks is a really nice trigger. Traders can use 110 for risk management. Investors, I would stick with a simple 200-day moving average, currently about 102. This stock has been above its 200-day for 12 straight months. Even during the worst of the market in April, it never even got close. I think this name is under accumulation. So of the 3, we missed Insmed. Alnylam already worked out. I think Gilead has the potential to be next. And I'm not in the trade personally yet, but that could change.
Okay, well, it's going to be a big market to track over the final stretch. NASDAQ lows of the day right now. We will discuss with Adam Parker, Lori Calvasina, Mohamed El-Arian, and Bill Miller IV. I hope you join me then, 3 o'clock Eastern. Joshua Brown, your final trade is what?
I remain long Rocket companies.
Thank you very much. Farmer Jim.
Cisco, I find this is an easy one. There was about an 8% pullback after earnings. That was basically because a new CFO is in town and he wants to set an easy bar to clear going forward. This one is obvious to me. It's already coming back.
Wow. Okay. Liz.
Software. I think it's way underloved, getting more underloved by the minute today.
Sure is, down more than 2%.
It is, Liz.
Sector. All right.
Getting it even more on sale, but a beneficiary of a rotation if that should happen. And I still think it's a good AI adjacent trade.
All right. Thank you very much. Joe T.
Insulin medical device maker, Insulet, PODD.
All righty. I'll see you on closing bell, 3 o'clock.
Hey, I'm George. This is Blue Cloud Trading. We just saw an episode of Halftime Report. We saw some clips from that. We saw Josh Brown, a number of other guests sharing their thoughts on the markets as well as some stock picks. And so what we're going to do in this video is we're going to cover a majority of those stocks that were talked about. And there you can see the list right here. There's about 16 of those stocks in the ETFs. We're going to look at those. And we will also take a look at the index ETFs, the SPY, the Dow Jones, the Russell 2000, the Euro stocks ETF. For those of you who are invested in Europe, we're going to take a look at Tesla, Apple, and Meta. We're going to look at some of the strongest sectors, and one of our members' requests, WING, is the ticker symbol. So let's take a look first at the markets. What happened today? Not a good day for the market, except for the Dow, which was up 0.02%. Very, very small gain here. You can see it gapped up in the morning, moved up, and then dropped around 2:30 or so. It started to recover a little bit, but it was down. It was up 0.02. Nasdaq, on the other hand, it actually gapped down slightly, dropped some more, and basically was down 1.46%. So it was down the most. S&P 500, same situation, down 0.59% though, not as much. And the Russell 2000 was down 0.77%. Let's take a look at the heat map. This is going to show us the individual stocks within the S&P 500. And as you can see, NVIDIA, big drop of 3.5%, which basically also kind of spearheaded the drop in a lot of the tech names like Microsoft, Oracle. Palantir was down 9.36%. All right, Tesla was down 1.75, Meta was down 2.07, Netflix, Google, Amazon, they were all down. Even Apple was down slightly, 0.14. What stocks did well today, though? It was the consumer defensives and utilities. Look at the green, all green here. Basic materials did pretty well. Real estate did really well today. Healthcare stocks did well. Okay. Berkshire was up 1.42. Insurance companies, insurance property companies, okay, like Progressive and Travelers Insurance. So let's also take a look at the 1 week performance. How is this like for the week, basically, right? And there we have it. You can see still the big names like Microsoft, NVIDIA, Oracle down, right? If you look at Palantir, down 15.63%. Huge drop for Palantir. Oracle down 7.5. So interesting. All right, let's get into the, oh yeah, one more thing I want to do is look at the individual sectors now. We're going to see which ones look strongest. At least for the day, it was up. Real estate, as I mentioned, consumer defensive, utilities, healthcare. Those were the top performance. This is the percentage up for the entire sector. Technology down 1.98. Consumer communications down 1.17. Here's the 1 week performance. Here's the 1 month performance. Healthcare has been up for the month, 4.47%. That's an interesting little change that's taking place here. So just keep that in mind as we go into tomorrow and the next week. Should be interesting to see what happens. But right now, what we're going to do is we're going to take a look at the technicals, and we're going to use the Ichimoku indicator. And there are a lot of you who have never even heard of this. It's a Japanese indicator, okay, that was published in the late 1960s, brought to the United States, and started to be used in the 80s. A lot of financial institutions use it. And why do I like this indicator? Because it's really easy to quickly assess the market. Ichimoku in Japanese stands for at a glance. Okay, so at a glance, we can quickly assess where we are. And so there are a few rules with this indicator. What you're looking for essentially is for price, okay, which is these Japanese candlesticks here, to be above the moving averages, the 9 period, the green line, the red period, the 26. The green one is Tenkan-sen. This one's Kijun-sen. The Senkou span A, Senkou span B, that's the cloud. And as you can see, the cloud actually projects into the future, which is unique. All right, and so we want price to be above the cloud always before considering a long entry with the rules of Ichimoku. If you choose to use those rules, we want the green line to be above the red line. We want single span A to be above single span B. So the light colored blue line, as you can see back here, was under. That was bearish. And then there's one more element of this, and that's the Chiku span, the white line there. That's the closing price projected 26 periods into the past. And what you want to do is look to see where that price is in relation. Sorry about that, guys. A little noise out here. That white line that you see right there is the closing price projected 26 periods into the past. And what we're looking for is for that price, that white line to be above the candle 26 periods ago. And if that is, the case, then it's very bullish. So the SPY is still, even though it's down 0.54%, you can see all of the elements here are very bullish still. This trend has not broken. We're going to have some down days. Nothing major happening here today with the SPY. The Dow Jones DIA ETF up, just like I said, it was up slightly. And right here, sorry about that, had to pause for a second. The price is still under that 451.34 level. Okay, so it's under resistance. We still need to see a breakout above that level before this thing starts to take off, in my opinion. If it is to take off, right? Because we are hitting resistance levels, and we've been stuck in this consolidation zone here for a while now, right? You can see that it's been kind of like just sideways action for the most part, right? What about Russell? The Russell 2000, that dropped a little bit, down 0.77%, but it's still holding up above the moving averages, and that's the key thing. All right, everything still looks pretty bullish here for the Russell. FEZ, the Euro Stocks 50 ETF, came right up to that 61.24 level. You can see that it came very, very close to it and then reversed. Okay, so it's a very strong level, 61.24. Why is that a resistance level? Because it's based on that prior high. If we break through FEZ, if we break through the 61.24, this ETF, FEZ, guess what? That's going to be an all-time high once we break that 61.24 level, and that will probably lead the stock further up. All right, not guaranteed, but we're talking about probabilities here, folks. There's no guarantees in anything with the market. And this indicator, too, is not 100% guaranteed. All it's supposed to do, really, essentially, is to give us some guidance. All right, what we're looking for is to see where we are in relation to where we were in the past, and where are we heading? Are we heading in an uptrend? Are we heading up, or are we heading down? And you're going to see some stocks that are heading down in a few moments, and so you'll see the difference. The QQQ ETF down 1.36%. So this one showed the most weakness today. It actually closed under the 9 period, but found support at the Kijinsen. Now we had a pullback here, on what day was that? That was it closed under back on July 31st, and it was only a 1-day drop. Okay, closed under the Kijinsen temporarily, and then it popped right back above. So overall, the moving averages do hold price, but you'll have these little moments where price pulls back and maybe gives a new opportunity, to re-enter if we see it popping right back above again. The VIX is the market volatility index. This one is still stalling. It's kind of just basically, it was up 3.87%, and that is just stalling right at that Tenkan, the 9 period right there. All right, let's take a look now at the stocks that they talked about in the show. So I already previewed these stocks because I wanted to get an assessment about what they look like. And what I did essentially is looked at these stocks, these 16 stocks on both the weekly time frame and the daily. And that's what I'm looking for. I'm looking for strength on both time frames. And I found it in just these stocks right here. Okay. So just 6 out of the 16 show strength on both time frames, which means that there's a higher probability that it will continue moving up. RSP, for example, all right, up 0.47%. Here it is on the daily, and here it is on the weekly. We get a nice bullish, bullish patterns and bullish trend here on both time frames. Expedia, also same thing. Now, Josh Brown brought this one up, and it's at 207.73. That's the level, the high right there that it needs to break through. Okay, it closed at, actually closed at 208. Oh, that's nice. I didn't realize that. When I looked at this earlier before the market closed, it was under the 207.73. The fact that it closed above it is important. However, because of the type of candle here, this is a doji or a spinning top type candle. All right, it's a reversal candle. And if you see that at the top of a move, that can sometimes be, possibly the top right there. All right, and we might see price pull back. In fact, if you look down below here, the volume has been declining steadily for these last 3 days as price has been moving up. So the volume is drying out, meaning there's less trading taking place in this stock. All right. So I'd like to see it break through that 207 and 217.12, 217.72. If it does, okay, Expedia will be hitting all-time highs, basically. So overall, I like it though. There's the weekly and here's the daily chart. How about Rocket? Rocket Companies. Josh Brown likes this one a lot. Back on August 19th. Actually, yeah, that was his today. That was his final trade today. So Rocket Companies. All right. As you can see here on the daily chart, we got a nice bullish candle after that pullback, little tiny hammer. And that's very important. It was up 3.42%. And if you look at the weekly chart, that looks okay so far. That weekly candle is still above the moving averages. It's still forming. We won't know what that looks like until Friday because it is in the process of forming. It's a dynamic candle, okay? But if you look at the fundamentals, you also have to determine whether or not you want to be buying a stock that's still not technically that profitable, has some sales growth rates that are negative 21.29%. But look, I mean, the bottom line is there's demand for it. You can see it because price has been climbing since it broke through the Ichimoku cloud. You can see back here that happened on June 18th. It's already moved up 34.42%. All right. So as long as you're buying when it's above, remember, when you're buying under the cloud, that can lead to a more extended embedded decline. And so you want to wait for it to clear the cloud. All right. And the Ichimoku cloud, just if you're interested in finding out a little bit more about it, this Senko span A is based on the midpoint of the two moving averages. So if you take that midpoint, you project it 26 periods into the future, that's where you'll find it. And the Senko span B, let me just show you real quick. Let me get rid of that 1598 line for a moment. The purple line, that's based on the midpoint of the last 52 periods. So because it's a midpoint, takes the highs, lows, divides that by 2. That's how it's plotted. That's why it flattens out like you see here. It can become a flat line. And when it's flat, it's even a stronger level of support. Okay. Same thing happens with the Kijinsen because it takes the highs, lows of the last 26 periods. The green line takes the highs and lows of the last 9 periods, divides that by 2. And that's how we get these moving averages that look slightly different than the traditional, like a 20-day moving average or 200. So I also have that 200-day moving average down here, superimposed, that dotted yellow line. All right. Let's take a look at INSM, another stock that I forget who brought this one up, but it looks bullish on the daily time frame. You can see price is doing pretty well, even though it was down 0.05%. Looks a little toppy up here. Looks like it might pull back a little bit more to the moving averages soon. On the weekly chart, still a strong uptrend. It's called Insmed Inc. It's in the biotech industry, which is a strong industry currently. Based on my analysis this last weekend, which I shared with members, Gilead Sciences, a drug manufacturer, another sector and industry that's pretty strong right now. The weekly chart looks good on this one, and so does the daily. But it has been pulling back these last 6 days. All right, you're going to have these little pullbacks, a little break. And then if it, of course, can break through that little trend line that you see right there, okay, we could see a continuation to the upside, just like we did over here. Just like we did over here. Okay. Just like we did over here. That's just how the market moves. PODD Insulet Corporation. Yeah, that was Joe T's final trade, Insulet. And that one has been looking pretty bullish here. The only thing about this one, let's take a look at that prior high there. And it's based on 329.33. All right, that's the level I'd be looking for it to break through, and it has not done that quite yet. You can see it's getting really close to that resistance level, so I'd hold off on that one. But otherwise, I like what I'm seeing here with the daily chart. You can see that the cloud has turned bullish, where the Senko span A crossed back above the purple line there, the Senko span B. The Tenkan-sen crossed back above the Kijinsen. The Chikou span is above price. Price is above the cloud. Everything is looking in order. Price is above the 200. Notice how when price came down to the 200, bounced right off of that and continued its move back up. That's why it's important to also, look at prior levels of support, lows, prior lows, look at the 200. These are important signals. XLK, technology, today, down 1.75%, closed under the Kijinsen, the 26 period. So there's a daily chart. Here's the weekly. I wouldn't be surprised to see it come back down another 2.5% or so on the weekly chart to retest that Tenkan-sen on the weekly. PLTR, Palantir. Let's look at this one on the weekly chart. Got into the Tenkan-sen. On the daily chart, it's also looking pretty bearish, right? Down 9.35% today. No on that one. Circle Internet has been in a decline here on the daily chart. You can see it's under the cloud. I'd skip that one since you can see that all these stocks do not have a blue flag. FIG, Figma Inc. That was introduced just on July 31st. So there's not a lot of data here for the Ichimoku to actually form. It's only looking at the Tenkan-sen and Kijinsen. If I switch the time frame to a shorter time frame, like let's say a 30-minute, we'll get more data, and you can see how it's been performing since its inception here. All right, so it moved up in the early, what was that, from July 31st to August 1st. It made a big jump, approximately 68%, and then from that high, it's already dropped about 51%. So it went from $142 down to 70. That's crazy. So big 50% decline that quickly. So that's why you have to be really cautious with these types of stocks that are when they first are introduced into the market. Okay, so let's go to BLSH, which is bullish, which is not actually technically bullish. The name of this ticker symbol, BLSH, is bullish in its financial services sector. You can see here on the daily chart, it's been declining. Let's look at this again. Not enough data for the Ichimoku to be plotted here because it just got introduced on August 13th. So let's look at the 30-minute. And so there it is. You can see that first day was very volatile. Jumped up about 31% the first day. And then from that point to that high there, it dropped 49.71% to where we currently are. So it went from about, $118 down to almost $60. Crazy. So these are very risky endeavors to get into. All right, these are okay to day trade, I suppose, if you're into day trading, because they're so volatile and they move a lot. But I wouldn't be investing in these at this time. Vanguard Information Tech ETF dropping still. Oh, this is a 30-minute. Sorry, let me go back to the daily. That's the Vanguard Information Tech ETF, and that one closed under the Kijinsen, down 1.89%. Here it is on the weekly chart, still looking bullish. So you've got the higher time frame still confirming that this is still in a strong uptrend, but the daily is starting to show weakness. PANW, Palo Alto, on the daily chart, you can see here that it came up to the 200-day and the Kijinsen right there, and then dropped. Okay, but it was up 3.06%, but this is not a bullish chart. Why? Well, you get the Chiku span, like I said, is under the candle 26 periods ago. You've got price under the cloud, under the moving averages here. It's above, the only thing that's positive is above the Tenkan-sen, the 9 period. The cloud itself is bearish. You've got a Senko span A that's under the Senko span B. So, and we have, obviously, as you can see, just looking at this chart, even if you're not using Ichimoku, I mean, if you're just using traditional technical analysis, you can see that we dropped through that low, right? We broke that low. We came right back to it, and look what's happened. It rejected that. It rejected going through it. It dropped some more. So this is kind of misleading. All right. When you see a stock moving up 3.06%, you might think, oh, I think that's going to continue moving up. Not necessarily. In fact, if you look at this one, it gapped up, and then it started dropping immediately once that happened. So we can look at that on, say, a 5-minute chart or a 3-minute chart. Here's a 5-minute. And here you can see the big gap up, okay, from yesterday, from Monday. It went all the way up to that level. It gapped up. And then it just spent the whole day basically dropping some more, and dropping some more. So this is not a strong uptrend on the 5-minute. And it certainly is not a strong uptrend on the daily either. All right, let's keep going. How about CrowdStrike? All right, this is a stock that I had a position in back on May 22nd, got out of it on July 10th. It has been dropping since. I got lucky getting out when I did get out, because from the high here, it's already dropped 18.67%. What about IGV, software index? This one's entered the Ichimoku cloud. So that one too is looking pretty weak here. Here's the weekly chart. Okay, pulled back under the Tenkan-sen. It's probably going to come down and retest the cloud. It could drop another 7% or more, maybe even 8% to retest that cloud. Robinhood. Okay, let's look at the weekly chart. So weekly chart is still above the cloud, and the moving averages on the daily chart, it's holding up above the 26 period. So showed some weakness today, down 6.54%. It also developed something called a bearish engulfing pattern. These two candles, you get a bullish candle followed by a red larger candle that engulfs it. All right, and I've showed you guys this many times, so I'll just show it because we've got new people coming into this channel all the time. So I want to make sure that you guys are aware that, we've got this cheat sheet that we can utilize here, the candle pattern reference sheet. And it has all the candle patterns. And you can get this on my Twitter account if you look for the links on my page in the description section. So here's the bearish engulfing pattern. Okay, this is what it looks like right here. You get that small bullish candle followed by a much larger one that takes it over basically, right? So price gaps up, comes up to that level, and then drops throughout the rest of the day, surpassing the opening price of the prior day. That's where the weakness is. All right. And if you don't know much about candlesticks, you can see here how to understand candlesticks: the opening price, the closing price, the high of the day, the low of the day. If it's a red candle, the opening price is at the top of the body, the closing price is at the bottom, the low is bottom of the wick, the high of the day or week, depending on what time frame you're looking at. The high of the candle is the wick there, on the top is the high of the day. But then this is where price opens and closes on a red candle. This is where price opens and closes on a green candle or bullish candle. So that gives you a lot of insight. The Japanese candlesticks. I would certainly, Steve Nissen, folks. Steve Nissen has great books on Japanese candlesticks. I've studied quite a few of them, and I recommend that you check out Steve Nissen's books. He's got some good stuff if you want to learn about candlesticks. Tesla, that will give you an advantage. Let's look at the weekly chart. Tesla, still inside the Ichimoku cloud, hasn't really moved anywhere on the weekly, and on the daily, looks finding just support at the 200. Apple is on the daily chart pulling back here. It looks still relatively strong on the daily chart. However, when we look at the higher time frame, the weekly, stalling. Okay, stalling inside the cloud, no on Apple based on the weekly. How about Meta? Meta, okay, on the weekly chart looks good because it is holding up above the Tenkan-sen Kijun-sen bullish cloud here. Everything looks good still technically on the weekly, but on the daily chart we're showing a little bit of weakness, right? So that pennant didn't turn out positive, and so now basically let's get rid of that. We don't even need to look at that anymore. You can see it's retesting this, the 747.90, that prior high. Good chance that we can get a bounce here. Kijun-sen is right there too. But I wouldn't do anything at this point until it gets back above the Tenkan-sen. All right. And let's see, let's continue here with the sectors. And I basically highlighted, I went through all of these and I highlighted the strongest ones. Okay. And there's basically 7 out of 23 ETFs and sectors. IJJ, the S&P Midcap 400 Value ETF, was up 0.54%. Is this a time to add a position? I don't think so, not quite yet. We're still under this 129.17 level based on that prior high. So I would hold off. XLP, Consumer Staples, on the daily chart. This one has been showing some strength recently. You can see that after that pullback here today, in fact, it was up 1.03% and found support right there. The Tenkan-sen and moved up. Now it did not clear these highs, so that's not necessarily ultra bullish yet. Here's the weekly chart. Okay, prices above the moving averages and the cloud. So we're kind of like stuck for a bit here. COPX also on the weekly chart looks good because prices above the moving averages and the cloud. And on the daily chart, same thing. I take that back, folks. It did end up closing under the Tenkan-sen. So it, it's just slightly under. It could be short-lived. It might come back down a little bit more, maybe another possibly 2% now that it's closed under the Tenkan-sen. It's probably going to look for the next level of support. All right, around 2% maybe. And then we might get, if we get a bullish candle, we might see a bounce again. But copper, I would not be adding a position here based on that candle. Utilities, on the other hand, is looking stronger. So this one, you can see that it, in fact, broke through that little trend line there. And it also closed above the Tenkan-sen. It was up 0.97%. So, if you look at all this, it's a couple of weeks now, we've been dropping, but now finally starting to show some strength. And guess what? We have a bullish engulfing pattern here. Small red candle followed by a larger bullish candle that engulfs the prior red candle. So it's the opposite of the bearish engulfing. XLY, consumer discretionary. By the way, if you guys want to know, let me just tell you guys how you can get access to this stuff. Right here on my Blue Cloud Trading homepage on YouTube. If you click on 9 more links and scroll down a little bit, you can find out about my channel. Scroll down here. This is where you can get that cheat sheet for the candlesticks under my X Twitter page. Okay, x.com/BlueCloudTrader. I've got a Patreon page if you want to check that out. And if you want to become a member so you can access the member-only videos that I do each weekend and share my daily posts with legend level members, you click on this. And there'll be some information at the end on how you can do that, okay? There'll be a pre-recorded video at the end of this video so you can find out how to do that. All right, let's keep going. XHB, Home Builders. Home Builders, daily chart. Looked good. Weekly chart looks good. It broke through the cloud here. The only thing that's missing out of this picture is the Senko Span A is not above the Senko Span B. So the future cloud is not quite there yet, but the Chico Span is above price. The green line is above the red line. Price is above the cloud. Everything looks good. What about XLC, Communication Services? On the weekly chart, still looks good. Senko Span A above Senko Span B. Daily chart has been pulling back these last 3 days. Might find a bounce here tomorrow or the next day. Everything else, okay, there's something off technically on the daily chart or on the weekly chart, and therefore I'm not going to cover it. And then member requests. We have one stock, Wingstop Inc., which is in the restaurants industry, consumer cyclical sector. And let's start off with a weekly chart on this one. So it's been entangled here inside the cloud for a little bit. It popped above it back on June 6th, closed back under on July 3rd, got back up above it on August 1st. Then again, so there's a lot of, indecision here between the buyers and the sellers, obviously. And so based on that, I wouldn't recommend adding a position here, obviously, because we've got price now currently inside the cloud here on the weekly chart. If you look at the daily chart, we're inside the cloud too. So that's indecision. But it's certainly, if you're holding a position, I mean, it's neither, bullish or bearish. It's just kind of like in limbo, right? So you could certainly hold a position like this when price is in limbo. You can hold a position as it's crisscrossing all over the place and wait for it to make a decision. Because if it gets under the low over here, gets under the 200-day moving average on the daily, and then price is also under the cloud on the weekly. All right, that could all happen all at once, or it could happen separately. But if you see all these things in confluence, all right, that's when you might want to consider closing your position, basically. If you're already profitable, my suggestion would be, if you're in profit right now, you could certainly close the position, just take the profits, and look for something that's a little bit more showing some strength, basically, because right now this is not showing strength. There are other opportunities, and those are the ones I shared with members in the members only video over the weekend, where I gave 20 new stock ideas, as well as which industries and sectors to be invested in right now. And yeah, so guys, stay tuned. Thanks for watching. Appreciate all of you. Don't forget to hit the like, subscribe button. Guess what? There's going to be a video coming up here in a few seconds if you want to check that out and consider becoming a member. And hope you all having a great day. I will catch you all in the next video. If you want to stick around to find out a little bit more about the members only video that I post each weekend. All right, let's talk about that for a moment. So, you're coming to this channel for the first time, you may not have subscribed yet, which is kind of crazy. Can't believe that you haven't subscribed. You know, this is free. Hit the subscribe button. I'll be popping up in your subscriptions in the future. If you hit the notification bell as well, you will be notified. So, where's the notification bell? Well, once you hit the subscribe button, okay, it will pop up the notification bell, and then you can select that. Another interesting that you'll notice is that you get this little plus button right next to the subscribe. That happens after you've subscribed. Why? Because they're giving you an option now to join. All right, and if you click on subscribe it plus, once again, another thing pops up, and this is the membership. This is where you can support the channel. Okay, you can either become a Blue Cloud supporter, a Blue Cloud trader, where you get access to exclusive member-only videos here under Blue Cloud Trader. Under Blue Cloud Legend level membership, you get those member videos. You can get access to day trading videos as well as the daily trade updates that I post. Now it says here under the community tab, it's not actually under the community tab. It will pop up in this next thing here. Boom. Once you've become a member, you'll see a new tab pop up called membership. You click on that, and that's where you'll find those daily posts on the trades that I've placed. What do I cover in this members only video? Like this one here, for example, that I posted just 21 hours ago on August 8th. I go over the, whoops, hold on one second, let me go back. You will see exclusive member only video. Okay, weekend update on the trades I placed throughout the week, plus new stock ideas for the upcoming week that are setting up. Okay. And all you need to do is just scroll down. You can see you'll have access to older ones as well. All right, so you get a more insight about my trading strategies and you know, the stocks that I'm actually holding, plus those 20 new stock ideas. All right, something to consider.